Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
Whoa!
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
Money's coming to me.
You know, the chart on technology has given us quite a ride. It's given us quite a ride for the first week of January. I want to talk about that. And Micron Technology's been giving us the lead, been pushing it. But before I do that, I'm tired of hearing this stuff right here.
We're in an environment where the Fed is lowering interest rates. That's a good backdrop for the consumer overall, especially if we see that 10 years start to stabilize and maybe impact mortgage rates overall. But we think generally the middle and high income consumer is holding in there, and that's what really drives the economy overall.
That's not true at all. Did you know that all the spending is at the top 10%? 90%, they have no money left. So that's a bunch of BS, bunch of crap. It's not true at all. And we have a weak labor market, terrible weak labor market. But that's a problem for AI stocks, especially chip makers. You say, well, Phil, no, I mean, look at Micron Technology since January 2nd, so explosive. But before I tell you why you got to watch that, here's another one that drives me nuts.
We're in an environment where the Fed is lowering interest rates. That's a good backdrop for the...
Okay. Every time they want to juice the market, it's the same thing. Rate cuts. Expectations of rate cuts drive the market more than anything else. I mean, that's the big tool they use. Expectations. That's what really gets me. That's what drives the market. Earnings don't. I talked about that the other day. That's a deception. Earnings don't. It's the beat the street by a penny. Oh, look at this. Every quarter we beat expectations. It's that beat of expectations. You hear that all the time. And they always beat 80% of the time because it's the corporation, the CFO, who sets the low bar. Of course they're always going to be. That's what drives. That's the driver right there. Not earnings, the driver. Okay, that big driver I just explained to you, that's the one. Beat. We beat earnings. Oh boy, just by a penny. And the same thing, I guess that's what I'm saying. I get tired of listening to this crap. I mean, it's just total BS. So, how everything is just so terrific because they put their arms around Micron Technology this week and say, well, that's it. This is it. The market's never going to come down again. I've seen that during the dot-com days. Same thing. So why is silver and gold exploding? Why has silver outperformed gold? Well, there's a couple reasons. One is that, of course, it's the economy. Also, there's tightening supply, especially of silver. It's really tightening. And the reason why the central banks buy gold and silver, because it's an alternative to the dollar. It's a reserve that they can't freeze, devalue, sanction. That's why they gold and silver continue just to keep soaring. That's why the central banks keep buying. And the central banks are huge buyers. I mean, tons and tons and tons. They're not going to stop. And the other reason why the central banks keep buying gold and silver, more gold than silver, I should say, inflation. We still haven't gotten that target. We still haven't hit that inflation target. They're worried about that. They're worried about the weak dollar. Now, I understand we've had a hell of a rally since January 2nd. I understand that. The chip makers, unbelievable. They're up from January 2nd to today. MU's up 8.8%, say 9%. Taiwan Semi's up 2.4%, and the semiconductor ETF is up about 4%. Mu is the leader. Now, but I want you to put this in context. Professionals they're saying, look, one great earnings print does not unwind the months of fear, the fundamentals behind that fear, and we know what they are. We have stretched valuations, stretched pricing. The pricing has just gone nuts. Unstable spending inside AI. We have weak profits. And that AI model shocked the hell out of everyone from China. I'm talking about the China model. That really put a lot of fear. Then you take a look at the history. You got to look at history. History tells you everything. November 7th. That was not long ago. NASDAQ had its worst week since March. Mid-November, the NASDAQ collapsed, almost 10%. Oracle, that got hit real hard. That's where the crack is coming into the AI bubble, Oracle. And once you start that crack, I don't care how much liquidity you put in, it won't match those cracks. But Oracle missed earnings. Now, early December, we had a rotation out of all these AI stocks. I mean, they were rotating out of AI, going into banks. I told my gang members, hey, let's move into the bank stocks. They're going to be terrific. And boy, glad we did. And by the way, this was interesting. Because of Venezuela, when we opened up on Monday, oil went up. And they're saying, well, the banks are going to come down. Now, we've been in the banks. And I told my members, now just have your stops in, take profits in the surging market, and then reset your stops. But they, again, when that oil took off, I said to myself, this doesn't make any sense. If we now have control of Venezuela, massive, massive oil, that would put oversupply on the market. That would put oversupply on the market. So why are they saying that the banks are going to go down? Because oil's going to go up. That means gasoline's going to go up. That means less disposable income. People will get hurt, less money to spend. Banks, they start missing payments, so bank stocks should go down. But instead, what happened? Banks went up, thank God, because we have a lot of stock in the banks. They went up. And then finally, oil takes a hit. And I told everybody this was going to happen. Matter of fact, I told everybody once this started on January 2nd, I think that was Friday, and then again this week, I said, just wait. Okay, you got to just wait. This big surge that we're going to have, and then we finally got, right? We got this big surge off of Micron technology. I said, wait 2-3 days, because when you get big moves like this, the institutions, they're smart people. That's why they're the smart money. They start thinking, and usually after 2-3 days, all of a sudden you start seeing a pullback in the market. You start seeing everything sell off. Oil, just tumbled. Oil just tumbled. But again, going back to my point of view, we're going to have more oil than we need. And it was interesting. They said, the bank said when they were rallying, he said, well, if oil was going up because there's a big demand and we don't have enough oil, then yeah, I could see that oil prices going up. If there's a big demand and we have oil shortages, then I could see gasoline going up and all that. But the bank said, that's not what's happening. This move that we're having is, is all about Venezuela and geopolitical. It's not about demand, that we got a problem with demand. So right out of the gate, they said, don't worry about the banks. And they did fine. Oil, after 2 days here, oil just collapsed again. But one thing that investors don't think of, and you've got to think about this, you really need to think about it, is that history tells us that weak labor markets really hit AI stocks hard. Have you ever heard that? No, they won't tell you that. That's why they always lie about the labor market. Oh, we got a strong labor market. Boy, the labor market's strong. Look at all these new jobs. No, they don't want to tell you the truth about the labor market because guess what? It signals a real slowing economy. It signals, economic growth stalling. And then what happens is corporations, right? They have to cut budgets. And what's the first thing to go in any corporation? If you own a little store or a little company, what's the first thing to go when things get bad? Labor. That's right, labor. So when you start seeing a slowing economy, then you got corporations, small businesses, their budgets are cut. And the first people get hurt, jobs. So the consequences of a weak job market is AI. They get hit. They always get hit. So they also cut out projects, cloud upgrades, AI data center spending. They cut that, and they just keep cutting and cutting and cutting. Now, that's what we saw in October, November, up to mid-December, up to December 17th, when AI came out with a gangbuster blowout in earnings. But that doesn't mean all the problems associated with AI, the fear of AI, they didn't go away. And it's dangerous if you start thinking, oh boy, I'm going to just jump in. I don't care. I got to get into AI, and I got to get into Mood, Taiwan Semi. I got to get into these stocks. I don't care what I pay for. I got to get in before they go up. You're going to get hurt. You're going to get hurt. I seen this back in the dot-com days. You had to be in these stocks before this happened. Then when you get big rallies, what professionals do, they take profits, reset their stops. Very few people with this rally we had, this giant rally with Micron Technology and the other tech stocks, they bought right at the peak. The FOMOs were in there buying like crazy. Tourist investors buying like crazy. Again, what are they doing? They're going to their margin accounts, even though the margin accounts now have been reset. It's harder, to get a margin account. And now there's margin calls going on. So what I'm trying to say is, do not be deceived by the jibber jabbers. Never follow the noise, follow the money. And you do that, you're going to be always right. And when you follow the money, and especially the bond market will always tell you, be truthful to you. They'll always be truthful, telling you which is the direction the market's going. Wall Street's not going to tell you that. Again, how many times have you ever heard anyone talk about, again, the weak labor market? You better start putting stops in your AIs. You never heard that. Just like the same thing I talked about yesterday that really grinds me is when they keep every day, right? Especially when we get into earnings season. Expectations. We're going to beat expectations. They always beat expectations by $1. And they say, the mother's milk. Larry Kudlow used to say this and drove me nuts. He'd say, Earnings is the mother of milk of the stock market. That's a huge lie. Okay? It's not earnings that drives your stock. I mean, when that one pop you get a pop, right? When it comes out with earnings, they beat estimates, everybody gets a pop. But the continuing trend or the sustainability, not earnings, it beats. And when you really think about that for a moment, it's like an open scam. It's an open lie. It's an open deceit by the market, by Wall Street. More people think that stocks are going up because of earnings. Earnings are so good, it's pushing the stock up percent-wise. And I better get into that stock the minute I hear, gangbuster year, solid earnings. Oh, solid earnings. I got to get in before the stock goes up. It's not what pushes the stock up. You got to remember that. So the real economy, okay, is only good for the top 10%. So you got to keep watching the labor market, because the labor market's going to hurt your AI. The labor market's going to hurt Micron Technology. Going to hurt Taiwan Semi. This has been a great rally. It's going to continue until it doesn't. And how do you know when it's going to stop? Follow the money. We'll be right back. Join my gang, philsgang.com.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox Business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Okay, welcome back. So we're talking about, yes, we've had a great January 2nd to today, the 7th. Taiwan Semi, but Micron, those two, but really Micron has been driving this. And a lot of people are going to get hurt. The people that made money is like my members, my gang members, because we sold into those stocks, Taiwan Semi, Micron. It spiked because you have to get them in early. You have to get in when there's a sweet spot. And that's another thing Wall Street never talks about, don't want you to know about, sweet spots. And you know that all the professionals, they only stay with maximum 6 stocks And they stay with the same 6 stocks during the year. That's true. The same 6 stocks during the year. And people don't get that. They're always out looking for the hot stock, the hot chip. So they always go to CNBC or Fox Business. You listen to them, you lose more money you ever make, especially with Cramer. Because they're giving you stocks that have already moved. The professionals, the institutions, if you take Goldman Sachs, JP Morgan, Citi, Bank of America, Wells Fargo, they control all the institutional money. There's about 5 big mega institutions, you know, like the labor market, California labor market, steel workers, those kind of things. And those labor markets are really important to, let's say, the 5 biggest investment banks. That's where their income comes from. They don't come in from you and me or the retail investor. It doesn't come in from that. So they have to, okay, if they were depending on the retail investor, they wouldn't make any money. So they got to always take care of the institution guy. And so they always push the market that way. They take care of them. So they make sure they get out of stocks first. And that's why it's important for you when a stock market or an index is moving or an ETF, also you see SMH here, like, take a look, like SMH over here. So one of the SMH, we watch this every day. So here's SMH. So if I take SMH and I bring it back 6 months here, and we bought SMH, the semiconductors, out of this consolidation, perfect consolidation, okay? And we caught it somewhere around September 12th, somewhere around there. And SMH at that time, I think, was somewhere around about 300, I think it was, if I'm correct. And today it's 384. Now, the semiconductors, remember, have pulled back. They pulled back, let's see, I think that was a 28% gain, if I'm correct. And look how many times they pulled back. They pulled back, and people don't realize, the semis, they're so hot, pulled back October 27, 2025. That's what I'm talking about. If you look at the history, you're not going to feel so warm and fuzzy. So we bought early. We bought out of this consolidation pattern. A consolidation pattern is a very big buy signal because consolidation patterns take a long time to form. They're powerful. And the further the index goes sideways or the further the stock goes sideways, when it breaks out, it is powerful. But look how it dropped. October 28th, it was a high of 371. It dropped to a low of 314. And look how the trend broke. And you had a perfect signal to sell that short. Then we had a weak rally, okay, from that low, November 21, up to, again, December. And then it broke again. And now we have this new rally right here, this new rally. It's going to break again. And it'll keep rallying. What we're getting is, let's see, let me figure out, Willie, give me an average. Give me from a high of, let's say, yeah, let's use 374 and it dropped to a low of 347. Yeah, and I told my members, because we're in Micron Technology, we're in Taiwan Semi, we're in all those popular stocks. But I told them many times, just like the banks, I said, they're going to pull back. We're going to keep getting 5 to 7% corrections. So this is not news. So as long as they can keep feeding us the noise, and the sentiment that like stocks, tech stocks will never come down again. And everybody's forgetting the history. So now let's take a look at, if you look at the chip makers, the most important, Micron Technology, look, they pulled back and pulled back. Now we got this extended rally. People are going nuts, okay, from January 2nd to where we are now. But that's a wonderful thing if you got in where you're supposed to get back in, right here, on that breakout right there. That's where you're supposed to get in. Okay? So, or you got in on this breakout right here. You got to get in on consolidations and breakouts. When they consolidate, break out, that's power. Again, look at this here. You had another little consolidation right in here. Another little consolidation here. You had a higher low, broke out. But that doesn't mean it's sustainable. Taiwan Semi, look at big consolidation, big consolidation. Look at the power of that. Look how it took off. You should have sold into that. You got to get in, okay, at the right time. They're called sweet spots. ADI, same thing. ADI hasn't been doing well. Also, we got this one big rally. And then we had a flag pattern here. Flag pattern is very popular. Boom, takes off. So my point is, the chips that are driving this, the banks that are driving this, and look at the banks. We keep pulling back 5 to 6%. Look at, like clockwork, 5 to 6% on the banks. Okay, Bank of America, 5 to 6%. And going back to MOO, 5 to 6%. So, and then you go to our metals like gold that we're in. These are the ones that were very heavily invested by gang. Okay, NVIDIA, we're not. Now, NVIDIA is starting to hit a sweet spot. We're going to watch that carefully. And the beautiful thing about sweet spots, everybody who sold it short have to buy it back, and that'll give you a short covering rally. So I don't want to get too technical. I don't want to bore you. But energy, look at energy. I told everybody when energy was going up the other day, it's going to come back down. It's just going to come back down. Matter of fact, I said everything's going to come back down. Now, but nobody cares about the fundamentals. You know, when you have deficits like we have, when you run deficits this big, think about it. Congress spends 40% of the revenue it collects on deficits. Until they stop with this deficit crap, until they cut deficits, you're going to continue to get these big rallies. These big rallies. And then they're going to correct big. When you finally can get these rallies and they're sustainable and the dollar starts getting stronger. Remember, the weak dollar is killing everybody. The weak dollar, okay? And we got to get strength back into the dollar. So these deficits is costing us. I mean, if you collect 6 million, 5 million, 5 trillion, and you're spending 7 trillion, I don't know if that's the right number, but we are spending more and we're taking in. How long can you keep doing that? The interest cost alone is $881 billion on our deficits. That's insane. Congress spending 130% more than the income it collects. They don't care. They'll never cut deficits. So from 2008, okay, to 2023, think about their spending. Increased 340%. 340%. That's incredible. That's nuts. So you've got to keep that when you're a trader in the back of your head too. But I don't let all that bother me that much because I follow the money. Because everybody throws the crap about this stuff. Every time you hear from a politician, you hear CNBC or Fox Business, they're going to cut deficits. No, they're not. I mean, just think about our tax revenue annually is 5.27 trillion. Our Medicare is costing us 1.7 trillion. Medicaid, 1.1 trillion. Our Social Security, 1.6 trillion. Trade deficits are killing us. Trade deficits. So we import 3 trillion. Okay, we import about almost 4 trillion, a little less than 4 trillion, and we only export about 3 billion, I think the number is. That's a killer. So Congress has spent so much, keeps spending. I mean, spending's going wild. So my whole point of this is that you keep seeing that money supply going up, and they keep telling you, oh, the money supply is going up. This is terrific. No, it doesn't. It's not going to help. That money supply, remember that, I mean, I'm not saying it's not going to help, but remember where the money supply comes from. Everybody thinks they print money and shove it into the M2. No, it doesn't. They don't do that. It comes from deposits. The biggest deposits come from the banks. When banks close deals and loans, they take the money at the end of the closing, deposit it. That's where the big revenue comes in. And the other big revenue comes in when the government pays Social Security checks every month and pays the government workers every month. That's how the M2 money supply goes up. But that's not free. And so the money supply increase has been 234%. We've gone from 7 trillion to 23 trillion. Now, how do they do that? Rate cuts, rate cuts, rate cuts, rate cuts. That's why they keep screaming, rate cuts, rate cuts, rate cuts, because they want to stimulate the economy. So you go to the bank, you buy a car, mortgage, the deal is closed, it's deposited. It's deposited. Then the money supply goes up. And the government keeps hiring more and more and more and more government workers. So when they pay those checks, the money supply goes up. So we've had, again, a great couple of days here. Everybody's all excited about it, but follow the money, not the noise. And stop listening to this. This is great here. Look at listen to
I
this.
don't think this particular geopolitical action has enough negative after effects at this point to actually upset the market. The market being driven by what looks like pretty good news.
No. News drives the market about 0.25%. That's it. If you have a rally in the market, 0.25% of that rally is news driven. 3/4 of that rally is driven by, again, all this nonsense with we beat estimates. So when we get into the earnings season, I want you to think, and I want you to hear how many times they say they're going to be estimates. Now, the stocks that we're going to stay with, my members, I'd like to have you join us. The stocks we're staying with are the same stocks we had last year. We made a ton of money on gold, a ton of money on silver. We made a ton of money on semiconductors. We made a ton of money on banks. And why should I change? Just because I turned the calendar page? What are you, nuts? Nothing's changed. They're going to continue to keep pumping this market up like they always do, okay, through a bunch of BS, not earnings. But they're not going to change a thing they've been doing. So why should you? Why should my members? We shouldn't change anything. And listen to the margin accounts. This is crazy.
Individual investor leverage has moved up sharply over the last 6 months. It's up about 26%. And when you include leverage ETFs plus margin balances divided by M2 to normalize it, it's at or close to a historic high.
Margin accounts, historic high. That took down the dot-coms. So why is it going to be, oh, it's different this time? As soon as you start hearing, oh, it's different this time, run like hell. Start taking profits. So I hope this little bit helped you today to understand how the market works and what we can expect of gold, silver, and tech going forward. Phil'sGang.com.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.